The moderator is Martin Kunzman, Director of Production and Content at DDC Financial Group. He will be joined by the following panelists: Jasma Siddiqui, Board Managing Director at SHUAA Capital; Sean He, Founding Partner at Silicon Harbor; and Dr. Douglas Murad, Partner at Gulf Arab German Chamber of Commerce and Industry. Thank you. Over to the panel. Thank you.
Good afternoon, everybody. Thank you for joining us. Our next panel is going to be discussing FPI, boosting capital markets, and how to streamline economies through FPI, as opposed to FDI on the last panel, so foreign portfolio investments. My name is Martin Kunzman. I'm the Director of Production and Content for DDC Financial Group. We're based in Prague. We're a business intelligence platform focused on the NPL industry. I'm joined on stage by my esteemed colleagues, which I've met today. Very nice to meet you all. So I'll hand over to you for some brief introductions, starting with Yassim.
Thank you, Martin. My name is Jassim Al-Siddiqui. I'm the Managing Director of Shua Capital. Shua is an asset management and investment bank based in the UAE.
Thank you so much. Hi, everyone. My name is Murad Douglas. I'm a corporate M&A partner at White & Case, which is an international law firm. I'm based in Germany, but I do a lot of cross-border transactional work.
Hi, everyone. Good afternoon. My name is Sean He. I'm a founding partner of Silicon Harbor Capital, which is a private equity firm based in China, investing technologies including semiconductors, robotic technologies, renewable energies, etc. Happy to be here.
Okay, thank you. I'm quite excited about this panel because we've got some really interesting and diverse perspectives from all of you representing quite diverse regions, Middle East, Western Europe, China. So, and foreign portfolio investment does play quite an important role in all these markets. So perhaps let's start our discussion by talking about what the benefits and challenges are with FPI within your own experiences and regions, starting with Yassim.
So foreign portfolio investment, of course, is very important for a country. It increases the capital inflows of a country, of an economy. With that, what happens is more job creation, more growth in the economy, and so forth. While this is the positive or the advantage of foreign portfolio investments, there are also significant challenges if a country depends on that. For example, volatility from short-term capital flows can cause disruptions in economies. If capital outflow is strong in an economy, for a foreign portfolio investment outflow, it affects the economy, it disrupts it, if it's not a long-term FPI. So those are, few of the advantages and challenges of FPI, and perhaps Dr. Murad can add more on this.
Thank you so much. Yeah, I totally agree. I think the foreign investments, portfolio investments, foreign direct investments in general are very important to an economy. And we in Western Europe currently face challenges. I mean, we have an increase of interest rate. We have, therefore, more scrutiny on bank side to provide funding. But the funding is so important because funding also, not only with bigger companies, but also with SMEs, venture capitals, to grow, to develop, to foster economy, and therefore to also develop the complete economy, right? So therefore, there's a huge need, and it's a lot of potential, in particular in these times, but there are also challenges.
Mm-hmm. And Sean, in the Chinese market,
I've been in the private equity investment for about 25 years. Prior to establishing Silicon Harbor, I worked for Intel Capital, the Carlyle Group, the Ares Management. I was a global partner of both Carlyle and Ares Management, which is one of the largest private equity firm based in the U.S. Obviously, in the last 20 years, we invest in Asia, China, Taiwan, Korea, etc. I witnessed, the economic success of Asia, especially China, for quite a few years. China has entered into high economic growth, make contribution to low inflation globally. So private equity is really very helpful to promote those countries to develop. Well, we raise the money obviously from a capital surplus countries, normally North Americans, Middle East, and then investing, I would call it capital deficit, countries like Asia and China 10, 20 years ago. So foreign investment represent a very important tool to develop those less developed countries to make the country today.
Mm-hmm. Okay, thank you. Thank you. Perhaps let's talk a little bit about legal frameworks and regulatory issues, and perhaps being the lawyer on the panel, Murad, you'd like to tell me a little bit about your experience on that and how important it is for investors to work within these frameworks and what the challenges might be.
Sure. I mean, I think I can provide like a legal background, but it's very important that also my panelists also explain more from a practical perspective, right? Mm-hmm. From a pure legal perspective, of course, there are challenges. So if you compare FPIs to FDIs, the difference is in FDIs you have a direct investment, you have a share in a company, whereas in a FPI you have a share in a portfolio. So you do not have a say into the company, which therefore, I mean, there's already a major difference, right? So the first question is, what do you want? From a pure financial perspective, I think it makes sense to invest also through portfolios. It is less risky. You share the risk with others. You have a pure financial track record, right? Nevertheless, there are regulatory boundaries, and these boundaries are not only in Europe or in China or in the UAE or in the Middle East. You can find them everywhere. So number one is regulatory framework for establishing certain portfolios. So if you want to establish a portfolio that shall invest in, for example, Europe, then there are regulatory frameworks that you need to obey, right? But that's for sure. And then on top, we have recognized in the recent 3 to 4 years a lot of scrutiny in certain investments from foreigners into certain fields of economy. For example, energy, of course, technology. Their governments can play an important role, and you should count in when you decide to invest in such companies or such sectors before you invest, and should do your assessment how to avoid or what are the legal backgrounds in order to mitigate any issues, right? It's comparable to merger control. Merger control is known to everyone, FDI or FPI control not. So I think that now goes hand in hand, and you need to take into account both, right?
Mm-hmm. Mm-hmm. What do you think, Yassin?
Well, totally agree with Dr. Murad. In my opinion, what is more important for an investor rather than the financial element of the FPI is the regulatory and legal element. It is the first priority for a foreign investor to be comfortable with the policies and the legal framework, the corporate governance that the country or the regulator in that country they are investing in is looking at. To me, I think this is more important than the financial element, the return element. And if we look at why other jurisdictions or why there are countries or economies that have less returns but more inflows of capital from outside, the main reason would be the rule of law, the main reason would be the incentive structures, the main reason would be the regulatory aspect, protection of minority interests, and so forth.
Mm-hmm. Mm-hmm. Thank you. And Sean, from your perspective in China, having recently, let's say, reopened for business, what are your observations that's happening in the market over there? in terms of legal and regulatory frameworks? Have they relaxed or?
Yeah, well, I think for China, right, they are actually the need of foreign capital more than ever. You know, we all know that the geopolitical issues, you know, are decoupling the economics between China and especially the United States. So the foreign direct investment in China obviously has been reduced because you know, one of the reasons pandemic and the other reasons really geopolitical issues. So from government point of view, they are really trying to stimulate to attract more foreign direct investment into China. So there's a new policies recently have been promoted, you know, to invest in China's infrastructure technology, you know. So I think for a regulatory point of view, they loose certain policies allow foreign companies to take control of joint venture in the key sectors such as financial sectors than otherwise before. So I think this is echo every country's, you know, attracting foreign investments really is benefit the local economy. But having said that, I think you know, we have enjoyed a really good time in the past, you know, high growth, low inflation rate. But look at today, because of the various issues, you know, we enter into supply chain shortage, high inflation, low economic growth. So as an investor, you know, I think an investor ought to serve a bridge, right, to connect the capital side and the market side for me to invest in China technology. But, you know, I was very much trying to promote my portfolio companies in China to bring the technologies to come outside of China, to come to Middle East, to go to, you know, Europe, where the products and technology will be needed. China right now is investing a lot of, you know, in technology infrastructures, and certain technologies are very global competitive. You know, technology have been proven in local markets. So that's part of the reason why I'm here. I try to, you know, promote ideas. We can invest in, you know, those Chinese companies, but bring them to the world, and I think that they will benefit, you know, to our investors as you know, to generate attractive return. Our historical IRR is over 60%. At the same time, really contribute to world peace. I think, you know, in a difficult time, people should really realize, you know, global trade, cross-border investment, put aside of political differences, it's still a very good, you know, way to unite people as human beings, right? To promote the world economy as a whole. I think, for example, healthcare sectors, renewable energy sectors, it's a global commitment. You know, pandemic really let us aware that the, you know, medical healthcare shortage not only happening in developing country, but also happening in the developed country like the United States. So, you know, there's a lot of cooperative opportunities for different countries, you know, work together to be more technology innovative and benefit the people, you know, in the world. Thank you.
Thank you, Sean. Very interesting.
If you just allow me just one sentence, because I mean, I think your point is absolutely right. You need to understand the framework wherever you go. And whenever you have an understanding of where you go, then it becomes easier, because then you can take a risk, but it's a known risk. If you fail, then you just say, okay, it's my risk. You can calculate in, right? Yeah. And it's exactly what you're just saying. Then there are so many opportunities in various sectors. It's real estate. Every real estate development has a risk. Right. And there's always also a regulatory risk. If you know the risk, you can calculate in, and the risk becomes much lower. And therefore, I think that there's huge demand for FPIs, as there are for FDIs, right?
Yes.
But there are also the challenges, and you just need to know and understand the challenges.
Which also highlights the need to have good partners on the ground, good advisors, co-investors, perhaps, you know.
Yeah, and your co-investors are the most important. So even if you do it through a portfolio, the portfolio invests in the company, right? then this company, you need to very much know what this company is doing and how it is doing, how it did it in the past, and what are the challenges, and and maybe how can you bring part of the business to your own business. So for example, bring something from Germany or from China to the UAE, right? And vice versa. So there we see a lot of opportunities, and I think it is the most growing part of in these times, right? Because we have shortage on various fronts, and this is the one bridge that can help still fostering the global market, right?
Yeah, agreed. Okay, Yassim, let's talk about trends and your outlooks that you foresee in this sector from your experience.
So, FPI is very much related to globalization. After World War II, the world has come together, industry is booming, the world opened up, capitalism was spread, etc., etc. This trend has started to reverse. It started in 2018 with the China and US trade war, then continued last year with the Russian and Ukrainian war. And today, more than ever, we see a reverse in globalization. We see a split between the East and the West. We see countries who have exported their industry wanting to bring it back, although more expensive and less feasible. I hope FPI will not be a victim to what we have been seeing in the past year, or more likely few years. We do not want to see in any economy other political powers, geopolitical powers, asking their investors to pull out FPI just because of certain issues, not because of financial issues or not because of regulatory or legal issues. So I do not think the globe is at its best in terms of the rate of foreign portfolio investment or even FDI. What we have been seeing is a lot of domestication. Everyone wants to bring industry back. Everyone wants to hedge themselves, build redundancies, and so forth, which is basically the reverse of globalization. So,
Cautious, yeah.
yeah. So definitely, this is a trend that has started in 2018, and unfortunately, it has been exacerbated last year. And I hope we don't see more of this going forward.
Thank you very much. And Sean, that sort of goes back to what we were talking about in the pre-panel chat about relations between China and the West, and how you mentioned earlier there's this golden time around 2016 to 2018, and then things sort of turned a downward trend a little bit, but now perhaps we're not sure where it's going to go. Now with the role that China is playing as peacemaker, let's say. But in terms of trends and where do you see things headed?
Well, I'm not a political commentator, so I can't comment really on the political issues. I think FPI or FDI, it is important, very important to help the different countries to work together. I think, the part of my reason here, I try to raise money here, right? To be honest, I mean, here, obviously, is capital surplus countries, a lot of monies. FDI, you can invest by yourself or you can invest GPs, make strategic investment through GPs to different sectors into different countries as needed, because you do need a local insight to make investment. And to make investment successful means you have to have an attractive economical return and also exercise influence on your agenda. So I think, I'm a private equity guy, so I like to make the right investment in companies so that I can sit on the board, I can really influence the company. I do think globalization is still very important in the future. Albeit, there's some difficulties, because I saw every country, they want to build their own supply chain. Unlike before, every country, they can, manufacturing based on their own unique advantages. But today, everywhere I go, they want to build their own infrastructures, their supply chains. The US have a CHIP Act. European is building all supply chain. Here, Middle East, I see a lot of people try to build EV car manufacturing. It seems a lot of a waste of resources and low efficiency of this. So I think a good future we can looking forward to is still, people will work together, make a contribution of their own advantages and make everything, more efficient.
Okay, thank you.
If you just allow me one comment to these 2 points.
Absolutely.
So, I totally agree, right? Jasim, you highlighted the issues that we are currently facing. In Europe, you feel it even more than potentially here, right? Because there is issues. So
we don't feel it here. We are the new center of the world.
So we see it's not only since the war in Ukraine. It's even before that, because we had issues when it started with COVID. We had issues to get masks because they were all produced outside Germany. So there's a huge demand in Europe to say, no, we need to have certain production places remain in Europe. But this is not contradicting globalization. You cannot get rid of globalization. Whoever thinks that the worlds are already so much interlinked that they will need to work together, right? Mm-hmm. And this is the biggest chance.
I would disagree. Some countries have been cut off the financial system.
Yeah.
So I think this is very much going backwards on globalization.
Yeah, no, you're right, and I totally agree. And therefore there are other ways to then cooperate and work together. And we see, of course, the challenges. So in the semiconductor space, for example, we saw investments from China that were forbidden. So the German government said, we are not accepting, although from a legal perspective, we were saying it's fine, right? It should fall under the rules, and then the government had some sort of discretion to say no. So therefore, I think the investments remain important, but there are challenges, certainly.
Mm-hmm. Okay, thank you, Norit. I'm aware we're a little bit time constricted. Unfortunately, some of the gentlemen have some appointments to make, so perhaps I'll just go with one last question. We've talked about the regulatory frameworks being important, so I'd like to know what else can and is being done from your experience to attract foreign investment, to make it easier for investors to enter new markets. So perhaps I'll start with Sean down the end.
Yeah, obviously, your regulatory could be a barrier for foreign investment. Well, in China, for example, there's a negative list, right? Certain industry sectors would not allow foreign investment. That could be a barrier. I'm expecting some of the rule will be eased so that foreign investors, easier for them to come to China to invest.
Okay, Murad?
Yeah, that's a difficult question. I think it's two aspects, irrespective of the regulatory framework. It's trust slash partnership.
Mm-hmm. Trust, yeah.
And the same goal of, making revenues. Mm-hmm. Because at the end of the day, if you trust your counterpart, if you have a basic relationship based on partnership, on equal partnership, mm-hmm. that has the same goal, then it can be very successful.
Mm-hmm. Mm-hmm. Thank you.
I think you've had great points from my co-panelists, but I'll just add one more thing, which is opportunities. So the availability of opportunities. You could have the best regulation, the best rule of law, but no opportunities, right? So it becomes uninvestable. So the right opportunities have to be there, and the abundance of opportunities.
Mm-hmm. Mm-hmm. And if the opportunity is there, you will find a way, I suppose.
Absolutely.
Yeah, I agree. Okay, unfortunately we have to wrap up. It was just a little panel, but yeah, we're out of time because the last panel finished a little bit late. So perhaps we can see if there's any quick questions from the audience at this point. And if not, then I thank you all for joining us today. And thank you very much for the quick and interesting chat. Much appreciated. Nice to meet you. And thank you very much.
Thanks.